This is Greg Gallagher again with G3 Investors. I'm going to explain the performance history. First of all, I didn't start with a $100,000 portfolio in 2005. I started with 88,000, but I've adjusted the figures so that you have $100,000 portfolios, and there's two different portfolios. One is an aggressive portfolio, which I've outlined here in green, and he invests in the indexes like the NASDAQ, the S&P 500, the Dow, but he also invests in sectors like biotechnology, industrials, healthcare, home building, semiconductors, and things like that. He trades a little more frequently than the conservative investor does, and he also goes short. Since 2009, he started taking short positions after I figured out how to do that. The conservative guy, which I'm highlighting here in yellow, he simply trades in the index, plus occasionally he'll buy gold or silver or something like conservative like that. Now if we look at, I started in November of 2005, okay, and you'll notice right away that it doesn't end in every time, every month doesn't end, every year doesn't end at the end of the calendar year. We had a few years where the rally, the market cut off January 1 to December 31st. But here in 2010, it ran from January 1st to November 30th. And then the same thing here, and that's because every year around Christmas time there's something called the Santa Claus rally, and it comes late or early depending on whatever the year is. But if we go back and we look at the gains that we've gotten, the first year, the long or the aggressive guy, even going long only, had a 44% return, whereas the conservative investor got 20%. Both returns are very good, but the more aggressive guy, like I say, he goes into oil services and other areas, whereas the conservative guy, he sticks to the major indexes. Here from December 1 through December 1, 2010 to December 20th, 2011, the aggressive portfolio earned 36% on his long positions and 25% on his short positions. The next year, he did 22% almost on short and 25% on long positions. So he almost ended up as good. Again, the conservative guy, he only goes long only. So when the market goes into a correction, he gets out of it. So there you have it. That's how the models have performed over the last 7 or 8 years. If you have a $10,000 portfolio, you can follow along and divide the numbers by 10. And if you're lucky enough to have $1 million portfolio, then you can multiply the numbers by 10. But that's it. That's the performance history of G3 Investors. Thank you.